Well, the conversations continue here at Davos 2025. I'm Shereen Bhan, and we've been bringing you a diverse set of guests, global as well as CEOs who head Indian companies, to talk about the outlook for the year ahead. Joining me now is a man who's delivered a very strong quarter for Infosys, ahead of estimates as far as revenue is concerned, and up the guidance once again. Salil Parekh, many thanks for joining us on CNBC-TV18. You've done the results threadbare, so I'm going to try and address other issues here with you, starting with the big claim that you're making here at the Infosys chalet on the promenade in Davos. Being AI first. We spoke about that a year ago. How do you back up that claim? Give me three numbers that back up the AI first claim for Infosys.
So first, thanks, Shereen, for having me here. And yes, we've had a good quarter. The focus for AI, there are two things that we're doing which we think are quite different. One, we are building 4 small language models. And these small language models are things that our clients are much more interested in today. These are models based on their proprietary data and our proprietary data. For example, we built one small language model for banking, and this is getting traction where clients are starting to use this in their environment. Another one for IT operations, and so on. Second thing we are doing is building agents. And agents, today we've in the process of developing about 100 new agents. To give you one example, we built an agent for doing research work.
Okay.
And this is in production with a client for a technology company where their internal people and their external customers can research what the product specifications are and changes are by using an agent.
Right.
And huge benefit to them. Things that used to take 14, 15 days, now down to 8 days, and other such metrics. Another set of agents we built for an audit company, Big Four. There we built 3 agents which are looking at their full audit process. And again, changes in there. So our view of being AI first putting it for clients, and then inside. So all of our service offerings have been infused with AI. We built AI roadmaps. We are doing AI which is secure by design, and responsible AI, where we want to make sure everything that we can build in to avoid what could be not good uses of AI, we're doing at the start itself.
So how many people now trained? The last time we spoke here, you had given me a number. What does that number look like today in terms of the people that have been trained on AI within Infosys?
So within Infosys, it's a huge number because there are 2 types of training. One is what we call AI aware, and one is a deeper training where people are using it. The AI aware, which is a broad training, is over 270,000 out of about 320,000 people are in this AI training. And it's really across the board because there needs every discussion with client, every deal, every large deal, every medium deal, there's a lot of interaction on AI. So it's built into many things.
So clients are asking you now specifically for what the AI use case is going to be and how you can contribute to that?
Clients are interested in where generative AI can help them. And what we are seeing is through agents or through small language models, in the past through large language models, we have various ways in any large transaction or program where they can benefit from this AI. And so we are using it, and they are quite happy with it.
So what is this going to mean, Salil, in terms of incremental spends by customers and by clients? And what will it translate into as far as revenue for you is concerned as well? As we look at people moving from pilots now to scale and speed, which is, of course, the theme here in Davos when we talk about AI adoption, what will it mean in terms of a bump up, both in terms of revenue as well as spends?
So there are 2 types of generative AI. One is the consumer one, where we see all of this discussion here, also the World Economic Forum, but everywhere, the massive capex that we are hearing about. Our focus is more on this enterprise generative AI, which is a smaller amount because the consumer one is huge. Now in enterprises, we are seeing the traction is large, but the revenue size is still not that large. It's quite small. And so, but it's increasing. So every quarter we see good traction and progress on what's going on. My sense is, if you sort of look back to when cloud started or when digital started, it starts off with enterprises where there's a lot of interest, and then there's an inflection point, and then cloud picks up or digital picks up.
So, what does this now mean, Salil, in terms of workforce? And I've been asking your peers this question, and most seem to suggest that it's not going to mean less number of people being hired. It's probably going to be the same, if not more. What's your own assessment? Are we likely to see a headcount reduction? Are we likely to see a status quo? Are we likely to see you hire more to be able to deliver on the capabilities you spoke of?
So there first, in Q3, we had a 5,000 person increase in headcount, 5,600. For this coming financial year, we have estimated in the range of 20,000 college hires. So all of this is pointing to an expansion. So why the expansion? Part of what happens with generative AI is you get more productivity benefit. But a lot of what's happening is you have much larger areas of the enterprise where you can do work in generative AI. So that larger area with the productivity, the net is still an increase in the headcount. And that's the trend we are seeing right now.
So you will continue to see an increase? For
this, we already have a sort of early plan of about 20,000 college graduates.
Okay. Let's talk then, Salil, about what is happening around us today. And the big change that's happened between the time that you announced your results and now is the fact that Donald Trump is finally in the White House and is signing a spate of executive orders. In fact, just this morning, he's also talked about a new AI infrastructure fund with Larry Ellison and Masayoshi Son and Sam Altman being part of that. When you hear what is happening in the US at this point in time, when you look at the possibility of deregulation, which has been promised for sectors like BFSI, what will that mean? You've upped your guidance already, but do you believe that there is a potential for a further upward revision on the back of the changes that are likely to come in?
So absolutely, I think to hear about 500 billion.
Yes.
I mean, it's staggering what type of thinking that they have in the US for technology and infrastructure. And this is all AI driven. You've also seen lots of other CapEx announcements over time. We see a lot of discussion on regulations coming down. The sense we get from sort of people we talk to, and even here the last 2 days, the general view is the economy in the US will do better. We have seen in the past when the US or Western Europe economies start to do better, our business starts to grow. So we have two axes, as you know. One is where we do more cost and efficiency, and the other is a lot of growth and digital.
Right.
And so that will start to play out more. My sense is if that US economy growth and so on happens, which is what it's now looking like, we will see more and more growth overall for Infosys as well.
One of the other interesting conversations that I've been having with some of your peers seems to suggest that perhaps Indian IT services also finds itself at an inflection point today as the world is moving into a generative AI-driven world. Now, in that context, the advantage that Indian IT services has enjoyed is being able to deliver efficiency at scale. But now, will you need to be much more IP-led and IP-driven? And what will that mean as far as changing the DNA of your organizations is concerned?
So no question there's going to be much more focus on whether we call it IP or innovation. So there is definitely, with the way generative AI is moving, let's say to build a small language model, we've put together an innovative approach. It's actually an approach which takes existing technology and builds it on existing platforms at a much lower cost than a large language model. So that innovation in agents, innovation in where it can be applied will continue to increase. And that's something I think we've been doing at Infosys for some time. So my sense is that's a good sign.
Yeah.
Now, more of that will happen as we go through the next phase. And we will continue to have that, let's say, the intense focus on cost and efficiency. So both of those axes will go well.
So let's come back to the bread and butter stuff. When you took over, margins were between the 26 to 28% range. What's the expectation now on when you will be able to get there? And also, the specter of double-digit growth, and I've been speaking to your peers about it as well. No one's giving a definite timeline, but everyone says it's not improbable, it's not out of reach.
So on, let's say, margins, we've put in place over the last few years a program internally to make sure that we improve margins It's a very comprehensive program. Our CFO is leading the charge on it. Internally, we are very positive about it. And over time, our aspiration remains to be in that sort of a high margin range. And my sense is we will achieve it over time.
What is overtime, Salil?
Overtime is over a period of time when we make all of the sort of actions within that program, make that happen.
So is that a year out? Is it a 2-year period? Is it a 3-year period? What are we talking about?
So we've not externally called it out in that way, but internally we do have some pretty clear goals of what we want to do over the next few years. And we have, my sense, a good set of levers that can help us to get to higher and higher margins. On the growth, I mean, we've already 6.1% growth in Q3. My sense is that if what we discuss about the US economy that starts to come about, the European economy in many parts, for example, the Nordics, working well, we will start to see that flow through to our business. And as that starts to flow through, whenever that happens, we will see a good sort of connection and good growth. But we don't, again, have a view on what the timeline is for when that double digit will happen.
So let me get a little bit more specific, because the view from everyone that I've spoken to so far is that 25 is expected to be better than 24, and 26 could perhaps be, in the words of one of your peers, an explosive growth year. So let me get you to either confirm or concur or disagree with what you hear.
I think for them it could exactly be that. For us, we have given our structure a guidance for this financial year. We don't have sort of externally a guidance for the next financial year, which will start in April, and we certainly don't have a guidance for the following financial year.
A sense, not a guidance, but a sense that you can leave us with.
A sense is difficult because we don't have a view which we share externally beyond March. It becomes more, we have to be focused on what we can see in our pipeline and so on. And so for this year, we've increased our guidance. The macro environment, seems to be giving us indications that over time things will improve. So we'll wait and see how that goes.
Okay, so wait and watch, but feeling better overall is the story today. On deals, and given the opportunities that you see, do you believe that the large deal bucket could potentially be an even bigger play in the year ahead?
So large deals, our pipeline is actually in good shape, slightly better than last quarter. The large deal announcement was 2.5 billion, which was a very good number, 60% net new. That was a good outcome. We also see mid and small deals looking good over the last 2 quarters. So my sense is a whole range of these would be impacted positively. If and when we see more of the financial services and retail come to other industries, that will also open up other deals for growth and for cost. So overall, the deal flow at this stage looks quite positive in the pipeline.
Looks positive. Let's talk about the workforce as well. You said that you will be hiring more, but what about wage hikes as well, Salil? And the conversation keeps coming back to the fact that at the bottom end, we haven't really seen any significant appreciation on salaries. Is it time now for the Indian IT services industry to do more, to do better, and can you afford it?
So there, firstly, we've just on wage hikes, we've announced ours Jan and April. It's in motion. We don't sort of comment about the numbers, but it's very strong wage increases both outside India and in India. I think at all levels we've seen changes over the years. We've seen even when individuals are entering from college, in addition to wages, the sorts of other benefits, training, just the environment on the campus. I think what we provide is an incredible positive experience.
So, Salil, 7 years now at the helm of Infosys, the 7-year itch for you at this point in time in terms of how you want to continue to transform the organization. I know you've laid out a transformation plan. Are you satisfied with where you find yourself today? And are there any specific focus areas that you will prioritize in 25?
So there, I mean, it's been incredible to have this opportunity for 7 years. We've completely changed the focus in terms of digital. We were talking about it earlier, from quite low to 60%. As we look out, the focus is going to be much more on AI. But equally, there are things, for example, to build AI, you need a very strong data infrastructure. And we are extremely good at that. So that's going to be a massive growth area. Cloud, you need a very good cloud infrastructure for our clients, both private cloud and public cloud. So that will be in a big way. But the most critical thing really is we want to be relevant to what our clients are looking for. So there's, in the next several years, quantum is going to be a big part of discussions. We're already building in our research area things on quantum. And then how we put Infosys together, which is this concept of one Infosys, which is a little bit sort of a softer concept, but really works very well because everything we do, we bring together for what the clients are looking for.
Well, Salil, it's been an absolute pleasure. Many, many thanks for joining us on CNBC-TV18, and we wish you the very best of luck for the year ahead and look forward to hearing back from you more on what your clients are telling you as more clarity emerges on the Trump changes and what it could potentially mean as far as the US economy is concerned. We will take a break, but the conversations will continue. Don't go anywhere. We're back in a moment with more. Joining us now is the chairperson of India's largest bank, State Bank of India, Mr. CS Setty. Always a pleasure. Thanks so much for joining us here on CNBC-TV18. Let's get the bread and butter stuff out of the way, sir. As I pointed out, conversations around inflation, interest rates in the US. But what about back home? The MPC meets in February. Do you expect a rate cut?
So broadly, I think our house view is that there will be a rate cut in February. There are some important measures the regulator has taken off late, particularly to infuse additional liquidity.
Has it helped?
Particularly daily VRR definitely had sent signal to the market that the liquidity support from the central bank will always be available. We are able to see the change in the market perception in terms of the liquidity availability. While the system liquidity is still tight and is deficit, but the availability on tap liquidity from RBI definitely is a good indicator. But I think our view is that the way the global economy, particularly in the developed economies, is behaving, and the rate cut seems to be imminent in February.
A rate cut is imminent in February. You talked about tight liquidity, sir. Let me also ask you about offtake at this point in time. What is the indication that you're getting? Because there has been visible signs of a slowdown across different sectors, particularly on the consumption side. What are you seeing at this point?
So there seems to be some convergence in the credit growth towards the deposit growth. If you see, I think we've been talking about lower deposit growth rate, not in tandem with the credit growth. And I mentioned earlier also, I think there will be some equilibrium sometime. And the December numbers indicate that there seems to be some convergence towards the deposit growth rate. I think broadly they are at the 12% rate, both deposits as well as loans. But you're right, I think the loan growth predominantly continues to be personal loans. While we have some degrowth in the at the system level, of course, I can't talk about SBI because our numbers are due sometime in first week of February. But I think the results, whatever we have seen from the banking system so far, indicates that there is some slowness on the unsecured personal loans, but I think home loans are doing pretty well in the sense the growth rate in advances is still coming from the retail segment, whether it is a personal retail, or SME, or agriculture. Corporate is still, I think, slower on that.
Still slower? You were feeling confident when we last spoke about a pickup in private capex. It's still elusive?
Private capex is happening in only certain sectors. I think the core sector, as I mentioned earlier, still is not investing as much as we have expected them to. So particularly on the steel, cement, while the capacity utilization have reached 75%. I think they're all looking at how the external sector, external environment improves, or how it is going to behave, particularly on the trade tariff in the new presidency in the US, how it is going to impact the overall global economy. I think everybody seems to be watchful on that front.
So it continues to be wait and watch as far as large private capex is concerned at this point.
Particularly on the core.
In the core sector,
side.
yes.
Yeah.
Let me ask you about the unsecured side, sir, because that has been, of course, a red flag that the RBI has raised. I was having a conversation with some bankers. The possibility of slippages moving from the unsecured side to the secure side, is that something that you're watchful of? Are you concerned also?
Even on the overall level also, I think it has not reached a stage where we need to really get alarmed about it. Obviously, the proactive steps what RBI has taken has reduced the unsecured personal loan, obviously. But I don't see the contagion effect coming in from unsecured to secured. Obviously, the underwriting standards have to improve. One great systemic improvement which we mentioned earlier also in terms of the frequent updation of the credit history.
Right.
Now from 15th January onwards, the reporting to the credit information companies is moving to a fortnightly basis, which means that the frequent updation will help system to understand what is the leverage at the individual level, so that I think the multiple lending to the same individual or individual families will be avoided.
You're spending a lot of your time here in Davos focusing on what's happening in AI.
Yeah.
What's the plan on that front as far as SBI is concerned in terms of adoption?
I think one thing which is coming out clearly that the new technology frontier, in the last 2 years we've been talking about AI, and it's time for us to implement AI and use cases are to be identified. We have done that basic homework. And we have identified essentially in terms of personalizing our customer offerings could be one of the major use case. We are building that into the itself. The other one is that we are strengthening our risk management practices, where particularly in the customer protection, where AI can be deployed. There's a humongous amount of discussion at Davos today. I think AI is being talked about, AI at scale, both in terms of productivity and more importantly, I think one element which attracted my attention in terms of the change management, what we need to do among the employees when we are rolling out AI in a big way. I think these are some of the takeaways for me.
So any thoughts on being able to incorporate some of that at SBI?
Obviously, I think we have already started doing that. And now we will be scaling it up at the enterprise level.
So let me end then by asking you, you've got a new governor at the Reserve Bank. You've already told us that you expect a rate cut from the MPC in February. What else do you believe is the need of the hour today, given the external environment as well as the domestic environment in terms of additional measures, especially as far as liquidity is concerned?
No, I think central bank is, in fact, I shared my thoughts with the governor also. Particularly the signaling what had happened through the daily VRRs and also the swaps which they're planning, I think is a good indicator of the support what central bank is providing to the banking system. I have no complaints on that front.
Okay, Mr. Setty, always a pleasure to speak with you. Thank you so much for joining us. That is India's largest banker joining us here in Davos. A rate cut is the call there from SBI in February. We'll have to wait to see whether the MPC delivers, but more importantly, SBI focusing on more digital adoption, AI-led development and change for India's largest bank as well.